we all gonna make it great of all times. WAGMIGOATS. Hello everyone, welcome back to our favorite trading tips channels. Today we are gonna... Ayo, you've been trading for a while, right? But let me guess, something still feels off? You're following the strategies, watching the charts, but it's like, yo, why am I not getting consistent profits? Damn man, I know that feeling too well. I've been there, for real, but trust me on this. For those who don't know me, I'm James TJ, founder of WAGMIGOATS, and I've spent years learning the ins and outs of trading. It's been a wild ride, but hey, if you're serious about becoming a smarter, more profitable trader, stick around. And hey, don't forget to hit that subscribe button if you haven't already. Let's build this journey together. You know what I'm saying? All right, let's jump into the first one, timing. Now, most traders only focus on their strategy. But here's the thing. When you trade is just as important as how you trade. You can have the best strategy in the world, but if you're trading at the wrong time, it's like trying to swim upstream. Damn man, you're just wasting your energy. For example, the London and New York overlap. This is golden time. Around 12 p.m. to 4 p.m. GMT, that's when you see the biggest moves, the highest liquidity. This is when institutions are active and the market really comes alive. But if you're trading during the Asian session, it's quieter, slower. Not bad, but you might not get the kind of setups you're looking for. Trust me, it's like trying to catch a fish with no bait. My advice? Focus your energy on high volume periods and skip the quiet hours. Damn, it makes a world of difference. Now, this next one is something not many traders pay attention to, but it's a game changer. Correlations. Did you know some currency pairs are like mirror images of each other? Let's take EUR/USD and USD/CHF. They're usually inversely correlated. When one goes up, the other tends to go down. Damn man, it's like they're playing tug of war. Why does this matter? Well, let's say you're watching EUR/USD drop, and at the same time, USD/CHF is rising. That's a clear sign the US dollar is gaining strength. It's like a second opinion that can help you confirm your trades. There are tools out there like correlation matrices if you want to dive deeper, but honestly, just start paying attention to how pairs move together or against each other. It's simple but powerful, man. A game changer. All right, let's talk about profits. Specifically, how you take profits. A lot of traders make the mistake of either holding on too long or closing everything too early. Been there. The pros, they scale out of trades. I call it the three-tiered take profit strategy. Here's how it works. When the trade moves in your favor, take a bit off the table at your first target, maybe 25%. Then, as it keeps moving, take another 25% at your second target. The rest, let it run, but protect it with a trailing stop. For example, if you're trading EUR/USD and you've already hit your first 50 pip target, lock in some profits. At 100 pips, lock in more. And if it keeps going, great. Your trailing stop will take care of the rest. Damn man, this way, you're securing profits while still giving your trade room to breathe. It's smooth sailing. Now, let's get into something that makes most traders nervous. News events. I get it. News can be chaotic. Markets spike, spreads widen, and things get unpredictable. It's like a storm. But here's the thing. News events can be a goldmine if you know how to trade them. The mistake a lot of traders make is jumping in during the initial spike. Don't do that. Damn man, you're just chasing chaos. Instead, wait for the market to calm down. Let's say it's non-farm payroll day. You'll see the market make this huge move after the news drops, but then it often retraces or stabilizes. That's your moment. Look for a pullback and trade in the direction of the trend. You'll avoid the chaos and still capitalize on the volatility. Just be patient, man. Patience pays off. Finally, let's talk about the long game, compounding. This is where a lot of traders miss the mark. Everyone's chasing big wins, trying to double their account overnight. Damn, man, I get it. But successful traders, they know it's about small, consistent gains that add up over time. Imagine this, you're making just 1% a day. Sounds small, right? But over a year, that's huge. Starting with $1,000, you could grow it to nearly $38,000 by staying consistent. It's not flashy, but it works. The key is to protect your capital. Don't risk it all on one trade. Build slowly and let compounding do the heavy lifting. I mean, damn, it's like planting a tree. You watch it grow, and one day you'll have a whole forest. So, there you have it. 5 secrets that separate the pros from the rest. Timing, correlations, scaling profits, trading the news, and compounding. Which one of these resonates with you the most? Let me know in the comments. I'd love to hear your thoughts. And if you found this helpful, don't forget to like, share, and subscribe. Let's keep growing together as traders. Thanks for watching. Stay sharp, stay consistent, and I'll see you in the next one. Peace.